Hello everyone, welcome to today's US Open Live webinar. It is Tuesday, February, the 7th, 10 minutes before Wall Street opens. We come off an eventful week. We had the central bank blitz, then the week ended with a bang, the blockbuster jobs report from the United States, which also caused a shift in market expectations around the appropriate policy path by the US Federal Reserve. And of course, markets now brace for Chair Powell's speech later in the day. And sentiment is tentative. We would say market mood is tentative as they contemplate those past events and gear up for Chair Powell later today. That's what we will be discussing today, along with other things, and of course the technical outlook of Euro USD and other assets. Before, however, we begin, as always, I urge you to read carefully through the disclaimers and the risk warnings, and then we'll get the ball rolling. Once again, please read carefully the disclaimers and the risk warnings. Okay, so let's get started. We have quite a few things to cover. Let's bring Euro USD forward. However, before we go into the technical outlook, let's say again that market mood is tentative as markets still digest last week's events. We had central bank decisions which carried on into this week with the Reserve Bank of Australia. We had on Friday the blowout figures from the US jobs market, and within just a couple of weeks, repricing around the Fed's terminal rate changed. It moved higher in terms of market expectations. And now we brace for Chair Powell's speech later in the day at the Economic Club of Washington. We'll touch upon the upcoming stuff as usual at the end of today's session. There is also heightened Sino-US tensions following last week's incident with this Chinese balloon that flew over the US for days. China, of course, spoke of a civilian airship, mainly meteorological, that simply veered off its path. The United States, the DoD, were pretty clear that it's a surveillance vessel that attempted to survey strategic sites and eventually shot it down. And of course, this led to US Secretary of State Blinken postponing a planned trip to China. And of course, moving into today, we had the Reserve Bank of Australia, which hiked rates and pointed to more tightening with a hawkish twist, we would say, supporting the Aussie following a recent inflation surge. Now let's go ahead and talk a little bit about Euro USD. So the pair slumped after Friday's jobs report, the surprisingly strong figures there. Unemployment dropped to 3.4%, the lowest level since 1969. And of course, we had more than 500,000 jobs added in January as well. Overall, very strong report, and it's hard for the Fed to pause, let alone pivot and cut rates with such strong labor market and extremely tight market, as the Fed calls it. Even though inflation is coming down, and Chair Powell had acknowledged the disinflationary process underway. Of course, these numbers came just a couple of days after the Fed decision, where although he was hawkish and did push back against market optimism for a pivot and rate cuts and a lower median and lower terminal rate, he wasn't forceful enough. He seemed to be okay in leaving the door open to such outcomes, and that, of course, had let's say cemented market expectations for a lower terminal rate of 5% compared to the implied 5.25% by the ECB. However, the jobs report led markets to reprice and embrace the Fed's 5.25% projected terminal rate. So now we're going to have to see what Chair Powell makes of that. We talked about during Thursday session a little bit about the ECB clear hawkish message. Now, the edge of this rate differential between the ECB and the Fed has been taken off after this strong US jobs report, but the ECB is still on track to deliver more rate hikes this year, has already done so, and will probably continue, at least based on the stated intentions by European officials. So we see here that we had this slump which extends today, as markets expect now Powell. And if you remember last Thursday, we had talked about the fact that a drop to the 200 period EMA would be reasonable. Now that this level has been breached and the pair is now exposed to this area around here, around 1.048, 1.046. But we believe that a new catalyst will be needed for a break below this level. In overall, from this region around here, we believe that there are multiple supports that can contain the fall. And again, we'll see what Chair Powell says today. This could determine the next leg. But again, the policy differential, I think, is still for now in favor of the USD. As such, we could see a rebound, but moves beyond 1.1067 here seem a bit tough at this stage. But again, there's still many uncertainties and events, mainly Chair Powell today. Now let's move to the Aussie and discuss a little bit today's RBA decision as well. So the Reserve Bank of Australia raised rates by 25 basis points. That's the fourth straight hike of this size, following a series of bigger moves. Policymakers pointed to further increases in a somewhat more hawkish tone, removing the previous reference that policy is not on a preset course. Removing this sentence, we believe, makes the statement a little bit more hawkish, and that's reasonable given the fact that inflation had recently surged to 7.8% in the fourth quarter in Australia, which was the biggest increase since 1990. And the bank, of course, expects it to come down to 4.75% this year, but still far from its target. Now, after its 8-month highs, the Aussie dropped and is now exposed to this critical region here of 0.6780, 67850 region, but a catalyst would be required for a break below this level. It's a strong confluence of support. On the other hand, the Aussie finds support. You see that it loses some of the initial vigor, let's say, but it's still in positive territory and tries sort of to return above the 200 period EMA. We can see a rebound, but again, the next big resistance at 0.7283 looks distant. It's all gonna come down again to the Fed and Chair Powell. Now let's move on into gold. Now the precious metal had risen to the highest level since April in the aftermath of the Fed, but then was knocked down by the surprisingly strong NFPs. It is now vulnerable to more pressure in a test of this region here, 1008 to 7. This is 38% Fibonacci of the rise from the 2022 lows to the 2023 highs. But we're still a bit cautious about sub 1800 moves here. Of course, again, we're gonna have to see how things play out with Chair Powell. On the other hand, even if markets are now more aggressive in their pricing around the Fed, the end is near. We're essentially 50 basis points away if we take the Fed's projections as the best guess for the terminal rate. So we could see some containment there, and obviously the precious metal hasn't lost the opportunity to push back above 1,900, 1,909, sorry, around this region, but higher highs is a tough call for now, with the last highs, of course, that we mentioned being at 1,959. And let's move on to Wall Street. Actually, we're gonna talk about the Nasdaq 100. We're 2 minutes in the US session. So the index had benefited from Chair Powell's frail pushback against market optimism for a pivot, but then poor tech results, quarterly results, strong jobs report, and the US-China tensions that we mentioned put pressure. Just to reference here, Apple, Amazon, and Alphabet largely disappointed markets with the results last Thursday. Although a day earlier, Meta had sparked optimism mostly with its messaging around the current year and the 40 billion share buyback. Now, the tech-heavy index is vulnerable to further pullback to this region here, 12,050, 12,000 flat, but further losses below the 200 period EMA would need a significant reversal in sentiment. Despite those negative factors over the last few days, we would say that actually, given these negative factors, we would say that the index has been quite resilient, and bulls are still definitely in the driver's seat, and they have the ability to set higher highs, but we'd probably early to talk about sustained strength past 13,200, given the repricing in market expectations around the Fed. So that's it with the technical outlook. Now let's move as to what to expect going forward, and it's a good time here to say that this is the only US Open for this week. We won't host one on Thursday, as we will be having our 2023 outlook webinars on Thursday, along with my colleague Russell Sor. So we won't have a US Open on Thursday. So ahead of us, as we said, the big event is Chair Powell, who speaks at the Economic Club in Washington later today. markets will be keenly awaiting for his comments following the not forcefully hawkish, I would say, press conference of last Wednesday and the strong jobs report. I would expect Chair Powell to jump at this opportunity and to be emboldened by the strong jobs report and reassert the Fed's policy path and let's say consolidate current market expectations that have shifted and embraced the Fed's 5.25% implied terminal rate. Of course, we're gonna have to wait and see, and of course, there are 2 months ahead, actually more than 2 months essentially, until the next Fed meeting, and that is an eternity, of course, with many data points before we have the next decision. Now, other than that, we also expect the State of the Union address by Mr. Biden, by US President Biden. It's not exactly an economic event, but we expect for him to sort of pound on the strong jobs message and probably some references around China given the recent incident. Now, in terms of data points, we expect UK preliminary GDP this week. Final for the third quarter was contraction of 0.3%. Also get jobs report from Canada, some stuff like that. Nothing super big this week. The truth is, we also get the earnings season, which continues. Entertainment giant Disney is due on Wednesday. It had dethroned Netflix recently in terms of subscriber, and now we want to see how this will play out following Netflix's strong report and the addition of more than 7.5 million users in the fourth quarter. And of course, the rest of Disney's financials will be in focus, as the last time around they had left much to be desired despite the strong performance of the streaming services segment in terms of subscribers, at least. Earlier in the day, we had energy giant, UK-based energy giant BP reporting a record annual profits only a few days after rival Shell had done the same. Of course, high energy prices have led to soaring profits for energy giants, and we expect Total Energies, French-based Total Energies, tomorrow. And we also get Uber, I failed to mention that, the ride-hailing firm from the United States, also on Wednesday. So that's pretty much it. Again, the main event is Chair Powell. We'll be looking for more insights as to his thinking following the recent central bank decision and the strong jobs report. That's it from me. As I said, we won't have a session on Thursday, so we will talk again with the US Open Live next Tuesday. Thank you for joining me.